Bitcoin has hit the resistance levels, and for most cryptos, they've broken through their strong structures. In this video, we're going to look at what is causing Bitcoin to crash, and of course, figure out what we can do about it in this short term and see where this market is projecting over the longer term. And no, I'm not going to tell you to buy all of the dips. That is not a sustainable plan in the markets. What we're going to look at today is where these support levels come in and where we could expect a reversal, what to look for on the charts for reversals. So if you haven't already, make sure you hit that like button. Easy, free way to get the content out to more people so they're not forced to watch Moonboy crypto channels. Hit that subscribe button down below as well. And if you want to know more about trading and investing in crypto and real estate, check out the link to our Patreon in the top of the video description. All right, let's dive in. So we got Bitcoin crashing, crypto's crashing. I've got three reasons here that a lot of the mainstream media is looking at as to why it's crashing. Essentially, I'm going to give you the answer at the beginning of the video. It's just that there are more sellers than buyers at this point in time. Now, it could come down to a number of things. Obviously, there is tax time coming up and people are blaming the new people for selling off cryptocurrency so late in the game to have some money aside to pay their taxes. You have the yield curve inversion, and this is obviously scaring the market. Note that these inversions are not 100% guarantees of a recession. You can look back to 1998, and there's also another example in the 1960s. However, all recessions have been preceded by an inversion. So just because there's an inversion doesn't mean that there's guaranteed we're going to see a recession, but of course that does scare the market. First up, the inverted yield curve. An inverted yield curve is essentially when the short-dated bonds yield more than the longer-term bonds. So if you're putting your money into an investment and you're getting higher interest rates for the short term than you are for the long term, that's the inverted yield curve. Typically, when the economy is strong and interest rates are stable, the yield curve slopes upwards. That's because shorter duration bonds usually have a lower yield, so you're going to get less for your money for the short term, and you should be getting more for your money for the longer term. But of course, this is what we're seeing at the moment, the inversion. Now, just taking a look at the chart here, the yield curve inverts on these particular dates, and the recession begins on these particular dates. This is the time between the inversion and the recession beginning. And so you can see it spans from 6 months all the way up to 22 months. And as I pointed out in the intro, in some cases, you don't even get a recession, as is the case of 1998. And so you can sometimes see that there are jokes from economists that say the yield curve has predicted 10 of the last 5 recessions. And so obviously this can be applied to anything. You know, it's very hard to predict anything that is going to happen 100% of the time. But what we can note is that all recessions are preceded by a yield curve inversion. So once the recession happens, you can look back and see that the yield curve has inverted. So the recession's already happened. So I think this is what is scaring the market. And that's the first reason that we have. This leads on to reason number 2. And that reason number 2 is the NASDAQ crashed and the US stock markets have crashed. And it's probably on the back of getting fearful of the yield curve inverting. It's basically flattened and it's actually reversed the other way right now as we speak. But of course that could change in the next coming days. It's not static, it's always moving. So the NASDAQ has crashed 2.3%. You can see it's fallen beneath our 50% line here. So that 50% was at around 14,000 points. And essentially it got rejected off the major 50% level. So it's underperforming the rest of the market. Technology in this stage of the cycle, regular viewers know we're looking at the 18.6 year real estate cycle. That is what leads the entire world, the entire economy. Once you understand that, everything else becomes way more simple and we don't have to worry about the day-to-day 2% ups and downs. But going back to what we're looking at on the NASDAQ's fallen, broken the 50% level as well. That's probably on the back of the fears from the yield curve inverting. And it doesn't necessarily have to mean that we go into a recession as we have seen previously. Just taking an example of 1998. So you can see back here, 1998, there was a negative and the yield curve did not, it inverted, but the recession never came. And the recession came after the second inversion, which was in 2000. And then we had the recession in 2001. That was after the dot-com bubble popping. As for some more major support levels for the NASDAQ, looking all the way back to around 11,700 points. This is taking a measure from the COVID crash low to the current all-time high, and then just taking a 50%, a balancing point between these markets. So until we get to that point and break that, I'm still going to look at this as mostly noise for 2022 in these markets, looking specifically here at the NASDAQ. As for the S&P, it did break its 50% level, but it still has another support level at around 4,400 points. And again, taking a further look back to all of the support and resistance, that next level is around 4,000, and then we can go back to 3,500 as well. So there's still plenty of support to the downside for the S&P. And I think over the next 3 to 5 years, we're probably going to see this stage of the market act something similar to what we saw from 2018, maybe into 2019, where the market was basically sideways, had some big corrections, and then eventually the market recovered and took off again from that point. The third reason is profit taking. We looked at this recently over the course of the mini altcoin season as the markets ran up. Some altcoins did 20%, 40%, some even did 150%, like in the case of Luna. But at the end of the day, once these profits are made in a bear market, people are looking to take profits. So the market does eventually come down. And so if the overall trend, which is what we've been looking at here, regular viewers have known what we've spoken about here, is we're looking at this going into a major low sometime later this year, potentially Q3, maybe Q4, could be late Q2, but I think it's more likely going to be late Q3 or maybe in Q4. If it gets extended out even further, then obviously we're going to look into 2023. It all sounds like no one knows what they're talking about, but essentially we're just looking at the 3 years up in Bitcoin, the 1 year down. Does not mean it has to go into an 85% drop like it did in 2017 through to 2019. But Bitcoin has shown to be running on these cyclical 4-year types of cycles. That doesn't mean absolute boom and absolute bust, just major rises and major falls, which is essentially what we're going through now. So the next thing I'm looking at here is how can we better position ourselves? Ethereum, still looking stronger than Bitcoin. Bitcoin pairings are getting crushed. I know a lot of people are still investing in altcoins. They're still buying the dip. They're still doing what they do because essentially, I guess people believe that you have to buy the dips on all these altcoins. If you look back at the top 10s in cryptocurrency over the last 10 years of crypto, most of these top 10s eventually die out. The things that have stuck around are, you can count them on one hand, Ethereum, and that have been a new token, Binance. Binance is still up there. Things that have died out that are in the top 10 are things like Litecoin, not even in the top 20 anymore. XRP on the way down, but of course it could bounce back. But essentially just looking at the third reason, profit taking for cryptos. So let's take a look at that. So the extreme fear is in play for cryptocurrency today. 20, yesterday was fear. You can see we just dropped out of that. And like we talked about, looking at the historic figures for the index, you can see if we hang around too long in the middle, it has to resolve one way or another. So we're in the middle for quite some time, drop back down to fear. In the middle, so neutral in terms of the sentiment. People don't like to be neutral. They like to either be fearful or extremely greedy, because neutral is just a waiting game. It's basically limbo. And so we dropped back into the fearful zone. We came back up into neutral. That was for the last 3 weeks, 2 to 3 weeks. And then we dropped back into fearful. And this is pretty much extreme fear now. So looking at the volumes, the money was flowing out last week. So this is just not my opinion of the market that there was profit taking. This is actually what is happening. Investors take profits with outflows totaling 134 million. Altcoins remain resilient. But if we take a look at what's going on here in the total figures, Bitcoin, Ethereum, altcoins had already dropped. So maybe that went into Bitcoin and ETH. And then of course, the outflows are coming through Bitcoin and Ethereum as well. So taking a look at BTC, the 50% level was taken out. So 40,600. Now we're underneath that level. And the next support, unfortunately, we just continue to take out support after support. I'm looking towards $37,000 as that is these swing lows. And you can see if we start to take those out, then our next lines of support are pretty much 33 through to about 34 to 35,000. So there's really not that much left underneath those lows. Now we could obviously go back a little further and then look towards the May and July areas, and that brings us out at those high $20,000. Of course, everyone's hoping that we don't get there, or at least the long-term holders, but the positive side to this is buy low, sell high. So if the prices go down, let's hope we have enough money to hold out, buy some of the lower prices, and then wait and have the patience for the market to go back up. So that's why I said in the intro around not buying all of the dips. Now, I think I made a pretty big point about that on the channel. Regular viewers know about that. During the previous crash of May, I continually spoke about not buying all the dips and just waiting for the confirmation that the correction had come. And then you wait for that confirmation, and then obviously you go on the journey again with crypto. And then once you see things start to break down, take a few profits. You never know whether this is going to be the breakdown or if the market's going to continue up again. But at least you're taking some profits when the market shows signs that it is breaking down and falling back underneath old all-time highs, as is the case with Luna at the moment, breaking underneath old all-time highs again, and then going on these next stages of the journey, the bear market rallies, and then seeing how the market reacts to the lows after it has had its rally. Now, I've got this area in a yellow box because basically the volume started to dry up as the market fell. So I want to look to some more hopium low volume weeks. So if we start to see some low volume weeks as the market creeps down, trying to test some lower levels, that could be a good sign that the selling is drying up. So the pressure to the downside is drying up, and maybe we'll start to see reversal like we saw last time. So it doesn't always necessarily have to mean a bad thing if the market is crashing, but we start to see some lower volume. It just means that the selling is getting exhausted, and then maybe we'll get a reversal in the opposite direction. So that's my hopium that I am throwing at Bitcoin, but of course it could take a little more time. I just see that that's coming out in the weekly chart. Just looking at where we currently are, you can see the weeks have started to dry up just a little bit, but you do want to see that dry up even further as the market, or if the market continues down. As for ETH, the bullish Ethereum narrative was very hot at the peak of the market in late March and early April. That was the old merge, the Ethereum 2.0 coming out. Got very loud at this time saying, we should be running up to new prices. Ethereum should hit 5,000, 10,000. Can ETH do this? That's the sort of stuff to be aware of when we get to these peaks in the market. Now I've got a change of behavior, a COB that came in yesterday. That's the key level I'm looking for the market to break in the short term. 3,200, just a touch over that, around 3,220 for Ethereum. And as I said here, it's stronger than Bitcoin because it's holding up above its 50% level from the lows of January to the March or April top. So it's providing a nice support level here at 28 to 2,900. Whereas you can see for Bitcoin, it's broken back underneath the 50% level. So that's a weaker position for Bitcoin than it is for Ethereum. And that might be on the back of all of the extreme bullish excitement about ETH changing over into 2.0. So that's the third reason crypto profit taking. Now for the key lows. The key lows are quite simple. Let's go to a macro view of the overall cryptocurrency market caps. Of course, always check Bitcoin. And we have it on the chart here, about 1.6 to 1.75 trillion, as that's where this next level of lows were coming in. You can see the closes. So that's going to be a key level for these markets to hold above. And then the major lows on the dates of late January and mid to late February as well, where the major lows came in before we bounced away to test the next higher levels, to basically go on at this stage a bear market rally. So they're the dates that we're keeping an eye on. Those are the prices that came in on those dates, late January, late February. This is a little base that was formed. So if it does break through that base, it's not going to look good. I don't mean to be all negative and downer on the whole situation, but that's essentially what the market is telling us. We can't do anything else unless you have enough money to pump the markets up on your own and let everyone else make a whole ton of money from it. This is just what the markets are showing. Of course, the positive to this is if you have patience, then we wait it out, get into some more positions as the market goes quiet again, and then wait for the moves to come again eventually, as they always have done over the last 10 years. And of course, there's no guarantees, but taking a bigger picture look, especially with the 18.6 year cycle, as I believe the market still has a few more years left in it, then I think we'll have that opportunity to get out. But eventually, things will come rolling over, tumbling again, but that's getting a bit ahead of ourselves. It's a few years away at this stage. That's what I believe is causing Bitcoin and cryptos to crash at the moment. 3 key reasons, pretty much one key reason when you look at it in terms of the inverted yield chart. But then the main reason is there are more sellers than buyers at this point, and it is due to the cycle. The cycle is still down at the moment. That's 2022. I feel like a broken record. I've talked about that for since the beginning of 2022 that I think this is going to be a volatile, choppy year. And while the market was still high in January, I had to make it sound a little bit less negative at the time, because as you can see now, if the market is up, people do not want to hear that there is a possibility of profit taking and the market's falling at that point in time. The good thing about being in the markets during these stages is as you start to develop as an investor and you really get the feel for how the market sentiment works and what people expect at tops and what people expect at bottoms. So with that in mind, make sure you like and subscribe, join the journey here on the channel. And if you want to dive more into becoming an active investor, check out the link to Patreon in the top of the description. There's also 24 hours left to score yourself up to $4,100 of sign-up bonuses with Bybit. Of course, I always talk about not getting wrecked on the channel and not buying all of the dips. I'm not here to pump up more and more trading. It's all about being cautious and conservative with your investments so you can be here for the long haul. Thanks again, guys. I'll see you at the next video. Until then, have more fun to get more done.